good morning to good evening to everyone present here. Don't work for money, make it work for you. Robert Kiyosaki very rightly said. Understanding the stock market is essential to making informed trading decisions. You need to know how to choose the right stock, which requires an in-depth understanding of a company's annual report and financial statements. Learn how to understand what stock represents in a company and how to determine the true value of any stock. This allows you to make better investing decisions by avoiding the costly mistake of purchasing a company's stock when the market has pushed its share price too high relative to its value. So we here at BVPINC bring to you the most awaited event, Stock Compile, where you'll be able to learn more. Now, I'd like to extend our heartiest welcome to our speaker for the evening, Mr. Nipon Goyal, who is not just a stockbroker but also an entrepreneur, author, technical analyst, and value investor. Welcome to you, sir.
Hello. Yeah. Thank you so much for the
Hello.
warm welcome. Yeah, I'm audible, right? I'm just reconfirming.
Yeah, you're audible.
Yeah, thank you so much. So, thank you so much, firstly, for the warm welcome, and I appreciate that part. So, yes, definitely, I think this should be a very informative session for all the joint visitors and all the students because it is very important that you realize the benefits of timely investing and the role it plays in your life to make you financially independent, as well as take you to a tangent that you cannot believe you can reach by the virtues of some traits that you need to imbibe gradually while investing. So today I'll be discussing all those through my presentation. I'll be just sharing my screen. Yeah, so definitely we all know that investing is as important as growing up. So why is that so? Because the main thing is that when you invest money gradually into stocks and different kind of financial securities, the way the stock and the company grows, you grow with them. A lot of things we'll be learning into this session that why we need to invest, what are the different ways that we can invest, what are different kind of investment venues that are available to safely invest, how to gradually increase your knowledge, how to play safe in the volatile markets, and a lot of different factors that are associated with investing. Because usually, when one thinks of equities or stock markets or investing, usually one problem definitely comes in our minds. That is, how safe is it? How can we earn money gradually without losing a capital? Because a lot of money ultimately end up losing capital when investing in stock markets or trading in the stock markets, and that is a big problem that is happening in India. That is why people usually refrain from investing or trading in the equity markets or stock markets. But if you're doing it in a disciplined and a timely manner, there's nothing that can beat you from generating good returns. So that is the entire purpose of this seminar, that you'll be learning why and where to invest, how to increase your knowledge, because knowledge plays a big part that we are unable to realize, and how to play safe in every kind of market. So before beginning, the thing is that we need to know some basics that okay, why investing as a whole is important. So investing usually begins at an early age for the students, which we do not know, in the form of FDs, which are done by our parents in our names. So that is an investment which grows slowly but is usually safe. That is why usually fixed deposits are preferred by people who are risk averse or do not like risk, because they feel that the money should grow substantially with time but slowly and steadily. So that happens even when we are a child or very small to even know that this is being done by our parents. But that is also a part and a type of investing which is being done in one form. So money should never be lying idle. The basic concept of equity investing or any kind of investing is this only, that money should never be lying idle, because we know that the value of money is something that we gradually understand when we grow up. We need to realize that any money that is lying in your bank account is lying idle. So you need to put it at work as well. We also, in our lives, grow up, we go in college, we do different kinds of education, we pursue different certifications, we make ourselves grow. So that is the same thing that we need to do with money as well, because if money is lying idle, it loses value. So to make it grow more and become valuable, you need to put it at the right place at the right time. That is where investing as a whole comes in, and how you invest that money in the perfect way is what decides the future of the money. Similarly, it is for you as well, that as humans, how we shape ourselves, our careers, how we grow ahead, how we invest our time, our personal time, our time into different co-curricular activities or different type of educations, all the different streams we choose or different career paths we take, that is what decides our future, right? And our personalities. So that is the same with money. So you should always think that, okay, if you have spare money that is lying idle, you can put it at work and make it grow in a safe way and right way by investing it into different kind of financial securities, which we'll be learning subsequently. So definitely, as you can see here, that 100 rupees in a bank account can become 120, 150, 200 gradually if invested. So the time value of money is the core of investing. And that is why we say that it should not be lying idle, because if it's at work, if it is invested at the right place, then you can gradually see that, okay, it is growing in the right manner. Secondly, in India, for that matter, as of now, like less than 2% or almost just 2% of Indian population invests in the stock markets, whereas in the global economies like US or other countries, it's like actually it's 50%. So there's a huge gap right now which needs to be filled and which will be gradually filled because India is on the path to supersede other nations in this decade, which is being portrayed and analyzed. So that is why there's a huge potential of upside in the Indian stock markets or Indian equities for that matter, where you can make substantial amount of money if invested in the right manner. Market cap to GDP for India stands at 80%, and the long-term average is 78%, whereas for US it's 113% and 82% for the rest of the world. But even without these facts, the point is that and a lot of investors are still ready to invest in the money, and that will definitely push in more liquidity in the stock markets that will gradually help the equities grow up. So yeah, definitely now we'll be learning about the different financial securities that we can invest. But yeah, starting with equities, and we feel that, okay, there are four type of usually financial securities that we know: equities, mutual funds, or ETFs, or debt market. But equities are known as the essence of investing due to a lot of reasons that we'll cover up in the later part. But just to quickly brush you through some of the major or some of the terminologies that are very important in the Indian stock markets. Like there are two functional exchanges in India, like the NSE and BSE. And the stock markets are usually a platform to buy and sell listed instruments or companies on the stock exchanges. That is where the term stock market comes from. There are two major indexes in India, like the Sensex and Nifty. And those exchanges are usually a basket of stocks, which you'll understand as you start investing and seeing. And those are basically a barometer to understand how the country is faring overall. And all the major listed companies are put under those two indexes. Similarly, a few major listed companies are like Reliance,
Aren't audible. Hello guys. I think there is some network issue with the speaker. Speaker will be right back in 5 minutes. Please stay tuned.
Hi, sorry, I think I got dropped off the meeting. Am I audible again? Am I audible?
Yes, sir.
Yes, sir.
So, I was on this photograph of where I was telling that usually investing happens in our day-to-day lives, and it comes from the little observations about different companies that we see on a daily basis. So, like, did we miss this chart, or like, did you see this chart? So I don't know from where did we get drop off. So, yeah. So basically, every study is baseless without practical observation. So that is what I wanted to show from this chart, that okay, the daily lives which we live, we need to observe a lot so that we are able to become a good investor. Because when knowledge comes, only then profitable investments are made. So, so the companies which I showed to you earlier, like these are basically the different listed companies or equities. So basically, we call them stocks or equities of different companies like Reliance, Bajaj, Asian Paints, Berger Paints. So they all have listed shares in the stock markets, which you can buy and you can become an investor of that company. So if you feel that okay, in the coming months, electric vehicles are going to grow and batteries are going to become big. So that means that, okay, you can buy stocks of Amara Raja batteries or Excite batteries because they make batteries. So if you're able to analyze the work that they are doing, if you're able to judge or observe from your observations that, okay, at petrol pumps, you can see that Amara Raja batteries are being used or Excite batteries are being used, and you feel that, okay, this can be the future. So you can become an investor in the stock of Amara Raja or Excite, and you can buy those stocks from the stock market. That is what is meant by equities. So the basic and essence of investing is equities, which you can start and build a portfolio of. Second comes mutual funds. So basically, mutual funds are nothing but a basket of stocks. in which different kind of stocks of different categories or sectors are merged together, and the fund manager decides how to invest those money. So mutual funds can also be of different types, like equity, debt, or hybrid mutual funds. A equity mutual fund is usually comprising of all the stocks, like different stocks which I just showed to you in an observation of different listed companies. A debt mutual fund has debt or non-convertible debentures or bonds like FDs in them as well, and that gives you a safety over equity mutual funds. And a hybrid is a combination of both equity and debt. Mutual funds have their both pros and cons, but for the ones who are not able to give time, or the ones who do not have the sufficient knowledge to invest into equities themselves, they can usually opt for mutual funds when they are trying to invest, because that is a better way out than making your own portfolio or than investing by yourself, because equities have their own risk attached because markets are usually volatile. So one another financial security which you can invest in as a new investor or when you're planning to invest is ETF. So ETF is similar to mutual fund, and usually in ETFs you are also having a basket of stocks like a mutual fund. The basic difference is that ETFs are listed on the stock exchanges. So mutual funds are usually not listed on the stock exchanges to buy and sell. But ETFs or exchange traded funds, they are listed on the stock exchanges and provide the same flexibility like a stock investment or an equity investment. So you can easily buy and sell ETFs of different companies. For example, one listed ETF is Kotak PSU Bank ETF. So when you buy that ETF, you're buying a basket of all public sector banks like SBI, Bank of Baroda, or Canara Bank. So in that way, you're playing the whole PSU bank or public sector bank story. If you believe that, okay, the Indian public banks are going to grow gradually as you go up, so you can go for the PSU bank ETF. So by buying an ETF, you're buying a basket of all those together, and you are lessening your risk factor, because if you're putting just one money in one's equity, then that carries more risk than putting in a basket of stocks. So coming to the third type of and the last part of different types of financial security. So basically we have covered equities, we have covered mutual funds, and now we have covered ETF, and now coming to the debt market. So I'm just brushing up the basic of different types of financial securities, and I'll be telling about them in the further slides at how to really go about them. So this is just a basic brush up that different listed ways or avenues in which you can invest your money in the stock markets, because investing is not just equities. Investing is a lot of different type of financial securities which can help you make a safe portfolio. Usually people do this mistake that, okay, whenever you think of investing or trading in the stock market, you feel that, okay, no, it's risky because it's equity or it's stock. But I'm telling all this because I want to make sure that you know, or you have sufficient knowledge, that there are a lot of ways in which you can invest your money safely. Safe investing or timely investing and diversified investing is very, very important if you want to grow your money. People usually do the mistake of going the wrong way or taking the wrong path by investing in stocks which don't have knowledge about, and thus making losses. That is the main purpose of brushing you up through these different type of financial securities which you have the options to invest in, like mutual funds, ETFs, and stocks or equities I've told till now. So the fourth one is debt market. That is a dark horse which people usually never understand, or even do not have the sufficient knowledge to get it from the market, because usually people don't try to explain more about these things. But this is also a very important part, because you cannot put all your money into equities, because equities have sufficient risk. But if you have some funds which you want to invest safely, or if you want to invest in a way like it can grow the way an FD grows. So that is where debt market comes in. So the debt market in India mainly comprises of two categories: the government securities, or the GSEC market, and the corporate bond market. So we can term these also into two basic categories which can be easy for you to understand: taxable and tax-free bonds. So tax-free bonds are usually government bonds which have annual payout, and they can be termed as GSECs also, like you must have heard the term government securities as we call them. Or taxable bonds are usually private sector listed bonds, like companies like JM Financial, Shriram Transport, or different companies like Edelweiss. They have their private bonds. So a bond or a non-convertible debenture is like an FD. So the companies issue non-convertible debenture or bonds, and they're saying to the investor, okay, if you invest in a bond, we'll be paying you a specific interest at a particular time, like an FD pays, and we'll be paying you out the entire principal amount of money after a certain tenure, which the tenure is decided. So two main things to look out when you're investing in bonds is the coupon rate, or the return or the interest part, or and the tenure of the bond. Usually it's around 10 years, and the interest or coupon rate is given on the face value. So when you delve more into it, you can understand that, okay, there are different nuances which will be associated with bond investing, but bonds usually give you more returns than FDs nowadays. There are even listed bonds which are giving you right now 8 to 9% annually. So those are absolutely safe like FDs, but giving almost double the return which an FD gives nowadays. So this is the lack of knowledge part that usually is there or prevalent in the investing culture, that people are unaware about the debt market. So if you want to invest your money safely and you want to refrain totally from investing into equities, then you can definitely go for debt market. So having covered the different types of financial securities that are available to invest, I just want to take you through a normal investment journey. Like, since we are discussing the basics of investing here and how an investing journey should look like and how you should be going about it if you're a new person. So the first and foremost thing which my purpose has been till now is gaining of knowledge. So you need to start reading financial news on a regular basis, even if you are in an active investor or a virtual investor or a passive investor. Reading financial news and gaining financial news is a must. That is very important to do if you are uh, a regular investor or you want to do good investments. You can also do that by taking part in different mock trading competitions or a virtual portfolios online, or you can do different kind of knowledge sharing sessions with your friends, or you can make a group of friends who are discussing on a regular basis. So it's not always important that you are starting investing. You can do virtual investing, or you can just observe firstly and then see that, okay, how things go, and then basically start off. But yeah, there's also one part to it that usually you always learn when you start practically. That is what gives you the actual edge or actual barometer to decide that, okay, the investments that you have done have turned right or wrong. And then gradually, after you gain some knowledge, you can start buying good undervalued companies. You can invest in debt markets or ETFs or different kind of financial securities. You can basically diversify your portfolio into the different kind of financial securities that I've told you. And obviously with that comes the basics of stock market. You need to understand the basic jargons of stock market, the basic terms and terminologies that are being used, because a lot of times what happens is that you're unaware of some terminology and you make a mistake due to that. So that should also not be happening. And obviously for investing, the basic and prime and the basic underlying step is opening a trading and demat account. So a trading account is basically an account that helps you to buy and sell, and a demat account basically is a bank of stocks. So basically, like you have a bank account for storing your money, demat account is there for storing your stocks. So whatever stock you buy, for example, if you buy one stock of ITC and you like that company, so you can definitely that stock goes into a demat account once you buy it. Obviously, also with this, you need to assess your risk, your risk appetite, because every person has a different risk appetite. Why do some people make money, or some people make more money, or some people make less money? So the logic behind that is that they usually do that as per their risk appetite, or their portfolio size, or their risk taking ability, or their knowledge. So these things decide how much you usually make money in the stock market by investing, because your personality also matters, your psychology matters as an investor. So gradually when you enter more into it and you start investing and you have some basic knowledge, you'll understand that human psychology or the basic judgments of different people or different stocks also help you make money in the long run. That is what, because a lot of factors are governing equity markets as a whole. Also, one thing for an investment journey should be that you are booking profits timely. So don't keep everything for long term. So the purpose behind saying this is that markets usually go in a zigzag manner. It's always that markets will be volatile at points. There'll be a lot of unforeseen events like war or famine or floods, or like the coronavirus came. So all these unforeseen events are usually called black swan events. So black swan event usually makes the market go very, very down, and usually markets crash during that time, and investors end up losing a lot of money. So to be safe during those times, there's no way out. But if you have booked profits timely in some of your stocks, or some part of profit booking is being done, so that just makes you feel better that, okay, you have some booked profit in your hand, so you can re-enter when the markets fall. So usually as a basic example of this, I can say that, okay, if you have bought some one thing at 100 rupees and uh, it goes up to 125, so you can maybe book some percentage of your shares there at 125, so that by chance, if due to the zigzag manner of the market or volatility of the market, that stock comes down to again around 110 levels, or maybe below your buying price of 100, suppose at 90 levels, then you can buy that stock again. So this is only to be a better investor or not get bored or not get frustrated, because a lot of times investing, as I told you, is also very very important as a part of human psychology. So what people usually end up doing as a mistake is that they invest in the right stock, they even invest in at the right time, but what they fail at is their psychology or their patience levels. So they get frustrated and they book losses or they book profits early. So these things can only be prevented if you are very calm and patient with your mind. So gradually, as an investor, you need to be very very strong in some of the core values which are needed for an investor, and obviously patience and calmness and discipline with knowledge is needed at every point of your investing journey. And definitely, obviously, for opening a trading and demat account, you need to go with a stockbroker, because uh, only a stockbroker can open a trading and demat account. But yeah, definitely I'll be coming to that later as well, but I'm just saying as a big point that usually a mistake which every young investor nowadays in India is making, especially, is that they are choosing a stockbroker only and solely on the basis of brokerage. That okay, which broker is going giving less brokerage, or there's a concept of discount brokers or online stock brokers which have taken up in India, but they are investing without knowledge there, or they are investing without any guidance, or they are investing without understanding that also with stock brokerage houses there is a lot of risk involved. A lot of stock brokerage houses have failed or have defaulted in the recent times, which had big names. So when you are going for a stockbroker, the basic and foremost parameter should be the credibility and how old the stockbroker has been, because your money is lying with a stockbroker. So it's very important that you choose your stockbroker wisely and not just on the basis of one factor. So I'll be coming to that later as well. So coming to as I explained you that okay, the journey of a stock of an investor goes in that way of gaining knowledge, then opening an account and then investing money gradually. But usually, what you need to realize that why investing is focused on that investing or timely investing, I'll say, usually helps you realize the power of compounding. That is the actual essence of investing your money and not trading with your money, because that usually people fail to teach you, or people fail to explain, or different fund managers or different investors or brokers maybe or might uh, not emphasize on the fact that investing is the core, that investing and holding on to your stocks or portfolio or your buying is very important, because only then you realize the power of compounding. As they say that power of compounding is the eighth wonder in the world. So what is that? That is exactly that when you are starting early, you have the power of time, because if you're starting at the age of 20s, at the age of 20 years, 21, in your 20s or even in your 30s, so you have no clue how much that money or even small money invested in, like in your 20s or when you are young, how much that money can become in 5 to 10 years. So that is why they say that rupees 10,000 invested in the late 90s or in the early 90s in different companies like Reliance, HDFC Bank, Pidilite Industries, which are big listed firms of India, the money has actually become in crores, like actually above 1 crore. So, and I'm speaking only about 10,000 rupees. This is a proven fact. So in 20, 25 years, that money has become like unimaginably big. So that is only because of power of compounding, which we fail to realize, that money is being compounded in a way that you can only get by investing into equities. So this is one thing that separates equities or stocks from all others. Basically, as I told you, as a brush up again, that there are different kind of financial securities. So in financial securities, equities, mutual funds, ETFs, and debt market. But why do equities or stocks, as we say, supersede all? So that is the exact reason that power of compounding can be best realized in equities only, because a company rewards you in different ways by corporate actions of stock splits, bonuses, rights issue, dividends. So all these things you get only when you have the stocks in your demat account. You do not get all these things usually in a mutual fund or ETF or debt market. So obviously, as they say that with risk, comes great money. So you are taking the risk of buying equities directly into a demat account. So that can reward you also in a way that you can't even imagine. So that is how you get wealthy by investing early. That you start early, you spend less than you earn, and uh, you are also saving a lot and you're investing well. So in that way, you're saving and spending and investing, and that investment can actually become very big as you go up. So some golden rules which I've explained indirectly till now, and I'm again emphasizing on those because see, investing and knowing which stock to invest in is one part. But as I told you again, that you cannot realize that how important human psychology or your mindset plays in investing. These things nobody will ever emphasize on, and that is where we actually differ from all others in the stock market, which I'll obviously come again to the later part. But there are some rules that you need to understand as a part or as a trait of an investor, because you need to have some discipline and some traits that are very important for you to become a good investor. How and why do some people like Indian investors like Rakesh Jhunjhunwala, Madhu Kela, or R.K. Damani, or even foreign investors like Warren Buffett, which you must have heard the name of, like why did they become so big? So they did not do anything extraordinary for that matter. What they did was invest at the right time, hold on to the positions, have a very good mind frame, and give time and nurture and invest in a way that you can sit on it and enjoy it. Because whenever you do the right investment, even after it becomes double, so you can be tempted to sell it. So how to refrain your temptingness and sit on those investments for it to become 10x, 100x, or even more. That also is a part of an investor or a trait that you should have as an investor. So that is why it's very important to be a good investor. You need to obviously have the knowledge, but after that, you also need to have the right personality and the discipline in yourself as a human being. So always invest what you can spare or afford to lose, because that is something which will always help you to not panic during a stock crash or a black swan event or any stock market crash for that matter. Usually what happens is that people invest in the right stock, they are even making profit, but whenever market falls, they panic. They think that okay, I'm losing my money. They see that the downside which they are having, the stock might be 10% down, the stock might be 15% down, their portfolio might be 30% down in, or 50% down also in worst case scenarios, and then they become impatient and they square their losses or cut their losses. So what happens is that ultimately they made a loss making investment which could have easily given them money if they held on to it. So holding on to it can only come if you are investing in a way that you can spare or afford to lose. If you have that kind of mindset, okay, I'm putting in only that amount which I can risk and not panic if that even falls for some time, then you can actually make amazing amount of money. Similarly, if you can't time the market, which usually nobody can time the market, then just give time to the market. And that's why I said that, okay, why did Warren Buffett or all these big investors become big? Because they gave time to the market. And that's why I said that right now, if you start early in your 20s or in your youth, you have the time to give time to the market. So that time and that period, you cannot even imagine how much that can become. Even 5,000 rupees invested right now per month on a monthly basis in the next 15 to 20 years have the ability to become in crores before you even retire. So this is the kind of investments that we can also help you make, and how investing in good quality stocks can make you realize unprecedented gains that you cannot. So you need to give time to the market. Third and main is that never follow the herd mentality. This is one mistake which I think every second person in India is doing as a matter of fact, that you talk to a lot of people, you talk to your friends or relatives, and you get influenced by their decisions. It's not a wrong thing to discuss knowledge sharing sessions or knowledge gaining sessions should always be there, but you should never be influenced or you should never follow anyone blindly, because people give their opinions on different bases or different kind of factors, but we do not realize that ultimately it is our money which is at stake, not their money. So we need to realize that okay, the stock which we are investing in, we should have proper knowledge and conviction in that stock. And even if somebody comes and says that okay, buy this or buy that or do not buy that, we should be strong enough to hold on or do what we want to do. So the end result or end call to buy or sell something should be yours solely. This is one big problem which is happening in India, that people are just following anybody who just says and comes out, okay, buy this or buy that, and even that person does not have sufficient knowledge about it, or even you don't have sufficient knowledge about it, and you end up making losses ultimately. What happens is that usually even anybody who's trading in the stock markets can tell you four good trades, but somewhere he'll go wrong, and that will erase all your money that you have even earned in the previous trades. So that is one thing which we fail to understand, that it's not about going wrong or going right. It's about how in net you are going. Because suppose usually we judge a person by their hit ratios or success ratios as a trader or investor. That out of 10 trades, how many go right? But even if 9 are going right out of 10 and one is going wrong, but you had put all your money in that last trade, you ended up losing all the money you have made in the 9 trades, and you are actually net in loss even with one wrong trade. And the opposite way, if you have just one right trade and 9 wrong trades, but that one right trade had sufficient risk management, as well as those 9 wrong trades had sufficient stop losses in place, so you might end up making profits in net. So these are different kinds of permutation combination which will gradually help you make the right kind of portfolio. And these things usually nobody will explain to you, or nobody will tell you that how important these are as an investor and which need to be followed. So always invest what you can spare to lose. If you can't time the market, just give time to the market. Never follow the herd mentality, a very, very important thing. And the hardest thing to do, and obviously as an investor, which have explained before, that is do nothing and wait for an investment to reward you. But that is what you need to do, and that is what is a part of human psychology and as an investor. So that trait you need to really imbibe in yourself. And that can only happen if you're investing regularly in small amounts. Don't put all your money at once. Just put slowly in parts, so that you're just putting some money aside which you can spare or afford to keep aside and not look at it. So that money, you need to be detached yourself from that. That is the way to go ahead. So now I'll be looking at some charts, and I'll be showing you how and why I focused on also that part of some timely profit booking in investing, and also telling you that sometimes how, even if you're listening to other people, how can they be right or wrong, and sometimes your own call is very important. So this is just an example of a listed equity stock or a company, DHFL, Dewan Housing Finance, which had a very big and nice name in the Indian stock markets, and it was doing pretty well fundamentally. And even as a research analyst or as an investor, maybe at some point of time, I also had a very inclination towards this stock, or a lot of people must have recommended it also. But and it did pretty well also. So the chart also shows that from zero, from the listing, it went up actually till 650 levels. And but gradually some frauds happened in the company, and some mishappenings happened, due to which the stock crashed, and it actually became zero. Like literally it became zero. This chart does not cover the end, but if you see that the company got delisted recently, and it actually made the equity shareholders value absolutely zero. So it started from zero, it ended up zero. So this is one thing which you need to realize, that okay, not all investments can turn right. And why timely profit booking is also important, that if you started from zero, if you invested even at 200 levels, it went up to 600 from there. If you invested at 400, it even went to 600 from there. So if you thought that okay, I'll just keep on holding it and it's a very good stock, that was not wrong. But some timely profit booking firstly could have saved you from the entire mess that was happening. Secondly, uh, uh, secondly also, that you could have, while discussing with different people, maybe some would have told you that okay, this company is doing right. Even when the company started falling, a lot of people started buying at that time. So the entire point is that all these things cannot be in control. So what can be in control is that you are diversifying your money in the right way, and you're not putting all your eggs in one basket. Secondly, you're booking profits timely, so that some part is booked, and whenever that stock falls due to some mishappening, then you are able to have some respite. Thirdly, also in investments, one thing is very important when you're investing, that you're timely reassessing all your investments. If you are investing in any company, you need to reassess after some intervals that okay, is the company doing right? What the fundamentals with which I had invested or started investing in that stock, are they still intact? And am I able to judge the future also, or is something wrong? So all this comes from knowledge. So basically this chart is an example to show that how a company went from zero till 700 or 800 rupees. It was actually the talk of the town. Usually every a lot of Indian investors had this stock and they even held on to it when it started falling, but nobody started exiting it. So if something goes wrong, you need to take the right decision and exit the stock. That okay, something is wrong with the company, I need to exit my holding. So that is also one decision you need to take as an investor, which I'm telling you right now, which usually nobody will tell that investing right is one thing, investing at the right time is one thing, holding on is also one thing, but then exit is also something that is very, very important as an investor. So that exit and timely exiting is important also, and reassessing your investment is also important. Similarly, a similar situation happened in Suzlon Energy. Suzlon was a company into solar energy, and it became a fad, or it became a trend with the contemporaries when it got listed some time back, and all, as you can see that it went up to 500 levels, and then gradually it has been coming down all the while. So so as I've written in here also, so this line usually is also a very common discussion line, which happens that okay, it's gone much down, now it can't go lower, it can't go lower than this. So one thing please remember in the stock market, that there's nothing and no such line that इससे ज़्यादा क्या टूटेगा या this cannot go down more. So the same story happened in Yes Bank, that if a stock becomes a falling knife, if a stock starts falling badly, then there's something definitely wrong to it. So that is what you need to realize as an investor. So all these things I'm telling you because investing again is one part, and investment and investor trait or personality is what you need to develop gradually. That will help you gain money in the long run, because good stocks anybody can tell. Even I can recommend you 10 good stocks. Another stockbroker can recommend you 10 good stocks. A good investor can recommend you 10 good stocks. But how you hold on to those stocks, how you make money out of that, is ultimately your decision and your human personality that you need to realize on. So similarly, when the stock came at 10 rupees, even then some people who hadn't invested till then thought that okay, now how much can it go now? It's just 10 rupees from 500. So it even went down to 2 rupees from there, which you can see in the charts of just last year. So from 10 also it went down to 2. So that's something that you need to assess a lot of times, and you need to stay away from stocks usually which is the talk of the town. That is also one thing, that Suzlon became the talk of the town. Everybody was talking about it. Yes Bank had become the talk of the town. Everybody was talking about it. DHFL had become the talk of the town. Everybody was talking about it. So sometimes this is also what comes in human psychology, that when you see every Tom, Dick, and Harry talking about a stock, that means there is something wrong with the company. That is why everybody knows about it. Now comes the right and the proper way to assess a company as an investor in the right manner, as a value investor. So there are two basic and optimal ways to assess a company. One is obviously from the different kind of companies' financials, which we call as fundamental analysis. That is the balance sheet, the profit and loss, the cash flow statements, the management reports, the annual reports, the revenue, the futuristic predictions, how the company is faring, the primary analysis, the secondary analysis, the primary research. So all that comes into fundamental analysis. And you must have heard about this term a lot of times, that the stock is fundamentally very good. This stock company is fundamentally very strong. So that is what we mean, is that okay, the company is faring well theoretically and on books. That okay, the company is making good profits consistently. The management is good. The operating cash flows are good. The company is able to generate profit. It's able to reward its shareholders. And similarly, it comes that how many dividends has the company given. If the company has been given consistent dividends, then usually the company is considered good, because the management has the intent to reward the shareholder. So that is very important also to understand, that when you're investing in a company, you're putting the bet on the management, right? So that is why you need to really have good understanding of who is managing that company, who owns that company. So when we talk about Reliance, so why we have so much of faith as an investor in Reliance, because we know that okay, the company is doing well as the company has been managed by the Ambanis, which have a very, very strong name, and he's the richest Indian in the world, Indian, and one of the richest people in the world as well. So that is what we need to realize, that okay, we are putting the money on those persons as well, because we trust them and we know that okay, they will lead the company to great heights and they will reward the shareholders. Similarly, technical analysis is usually used for short term, and there we are using the historical data and price movement and charts to predict the future movements of the stock. So which I just showed to you earlier, like of DHFL and Suzlon. There's after assessing the stock data of the previous things, sometimes people try to understand or assess the future movements that a stock can give, but that is usually more for short-term movements or short-term investing. So even in investing, you can have both short-term investing and long-term investing. That you can be investing in a company for 6 months to 12 years because you see that okay, this sector can be bright or outperforming for some time. So that is also one part of investing which is very important, short-term investing. And the second part is long-term or proper investing. So usually I recommend that you should be doing both the things. In short-term investing, you are booking the profits timely, as I told you, because that also helps you evolve as an investor. And in long-term investing, you are just buying the right companies like Reliance, ITC, and Dabur and different such fundamentally strong companies, and you're sitting onto them and holding onto them because you know that it's very rare that something wrong fundamentally will go wrong in these companies. So, coming to the fundamental part is also, as I already said, that good management is very, very important because when you are putting your money in a company, you need to know that, okay, the management is faring well. If they have the right vision and the right personality and the right education and the right background to handle that company, only then they can handle their employees well and they can gradually make the company big. Similarly, the sector should have a bright prospect. I think initially in the equities part, I had showed you that equities are usually defined by different sectors like automobile, IT, defense, or FMCG. So these are different sectors. So right now, if we are talking about electric vehicles, so EV is a segment, EV is a sector which now people are bullish on. So if you feel that okay, electric vehicle can be a big thing going forward, so you will feel that okay, let's start looking for companies in the EV sector. So that sector has prospect. Then you will start looking for a company in EV that once you have identified the sector, you will see that okay, let's go for a good management like Tata Motors. So Tata Motors is a company which is making electric vehicles, and the management is good because the Tata's name is the biggest name which you can get. So two factors are ticked there. Then comes in valuation. So now assessing whether Tata Motors at this price of around 500 rupees, which is it is trading at currently, is that a very good price to enter? That is where the valuation part comes in, and all those things of balance sheet, profit and loss statements, cash flow, and the futuristic valuation come in, and then you decided okay, this price is good. But still, to this, I'll be giving you or telling you very very frank thing that no stock price is usually undervalued or no stock price is usually overvalued, in the sense that if you're doing timely investing and if you're putting your money regularly, that is the actually ideal way ahead to decide a good valuation for yourself. Because if you're putting in money regularly, for example, right now Tata Motors is at 500 rupees. If you start investing right now, you can just buy some percentage every month. So in that way, you will be investing it at it even at 550 rupees, at 500 rupees, at 600 rupees. Even when it falls, you are investing at 450 rupees, 400 rupees, 350 rupees. So you end up making a long-term cost averaging. So that long-term cost averaging is something that usually makes you have a fair valuation in your own holding, because more than the valuation, it's all about how and at what price have you bought it. So that matters a lot, because and that cannot come with time or at the right point. It is very, very hard to get the stock at the right valuation always. So that is the best way forward for investing, that you're buying the company or the stock regularly at every month. But yeah, overall, it's very important that when you're investing in a stock, fundamentally, good management, bright sector, and valuation should be the three major factors that you're looking for. These are some candlestick patterns. So this is just a brush up that I told you about right now. Technical analysis. So technicals usually have historical chart analysis. So in that, we look at different patterns or the movements of stocks, and then we judge about the short-term movement. So this is for the ones who really want to delve into it. So I'm a technical analyst. So I usually also sometimes look at short-term trends of the market or the as a whole, or different stocks on different parameters. For example, a stock has been going higher and higher since 3 days. So as you can see here, the three wild soldiers. So that is the candlestick pattern which it made. So that in itself signifies a bullish trend. So this is something which goes up to another level. And if you plan to become a technical trader or investor, and if you want to go deep into these, then you need to realize about these. But this is just a brush up or just a simple know-how that okay, how technicals move. Uh, so this is a chart to tell you this. So these are basically candlesticks. So if you can see that this is a chart showing candlesticks of a stock. So for example, if three big white candles are there continuously, then usually it goes up even after that a bit. So when the stock goes down, it's going up So that is what was represented by three white shoulders there. But obviously, right now, there's just a basic brush up. A lot of different factors involved in technicals that need to be supported together and go hand in hand for you to decide the movement. Not just one pattern or one factor can decide the movement of stock ahead. So, as earlier told, as an investor, as an investment journey, as a good investor for making good investments, a decent path that you can take and should take is first and foremost diversification of the financial securities or instruments that I have told you, as well as sectors. So basically, diversification can mean either you're investing in different kind of financial securities like stocks, bonds, mutual funds, or ETFs, or it can even mean that you can invest in different stocks only of different sectors. For example, you feel that okay, electric vehicle is going to be a favorite sector going ahead, or IT technology is going to be a major sector going ahead, or artificial intelligence is going to be a major sector going ahead. So you can diversify sectors and choose stocks, a couple of stocks from those, and make a portfolio yourself in your demat account. So that is what is diversification. So that is very, very important because safe investing can only happen by diversification. Because if you're putting all your money at one stock, then maybe at some point of time when the market crashes, then you'll have a big hit on your portfolio, which usually people are unable to take. So that's why it's your personal risk appetite, your nature, your temperament, your investing journey, your investing goal that needs to be very, very well set when you're beginning your investment journey. So, but diversification is usually recommended because that helps you become safe. Regular money deployment is very important. As I told you that usually to decide about the stock valuation or the right timing is very important, but not possible. So you need to deploy money gradually over different periods of time frame, and usually that is generally on a monthly basis a suitable option, and then you can do that and have a good valuation of the company. Thirdly, dividend paying equities and constant fixed income investing is also important. That sometimes you have some funds which you feel that okay, I can't risk these totally, so those you can put under fixed income investments like bonds, which are equivalent to FDs, and you can have a fixed income portfolio as well, and that will also help you become safe during uncertain times, because when the markets are crashing, then equities have no respite at all. So in that time, if you have some fixed income investing, you feel that okay, I have some deployment in that sector, and that just makes you feel safe. So it's all about how much money you're putting in and what role that money plays for you. Similarly, dividend paying equities are a must when you're making an investment portfolio, because as I had told earlier, if the company is paying dividends, then it is usually considered as a good company because it has the intent to reward the shareholders, and you can easily make good money, and dividend is also like an interest. So basically, if you are into a good dividend paying stock, that is somewhere equivalent to that of an FD. That okay, you are putting in an FD which is paying you an interest, the stock is paying you a dividend, but the stock can also grow. An FD cannot grow, but a stock can grow. So if you have timely invested in a good dividend paying company, that can be supported in the form of an FD. And obviously, timely profit booking in some part of your portfolio is also important. Last and not the least, sit back and relax. That is also very, very important. Holding on to your positions, not being very panicky at different point of time, because the markets always move in zigzag manner, and holding on to your investments. And also, that is my suggestion that in India as a whole, this type of guidance, this type of personalization, this type of superior research, and the credibility that we command is very less. So if you open your trading and demat account with our firm, that is GoTrade India and KK Securities Limited, under my guidance, the way we'll help you make a good portfolio, the way we'll make you invest is actually very something which we'll experience differently from all others. The comfort that we provided every step, every single step is very, very unique and different. The comfort that we give you as an investor, as a client, as a service user for our services as a broker is unparalleled, because we have seen the bottom of the pyramid. We have seen how different peers are faring. Everybody's doing a good job, but that guidance, that personalization, that concern for the client, that concern for your money, that is lacking somewhere. That is where we step in the best way, that we are concerned about every single client, be it big or small. We have a big portfolio of HNI and corporate clients, but still every client matters to us. And it's you who can actually decide and tell your risk appetite, your time frame, and the return you are wanting. And only with those three parameters, we can assist and recommend you the best of stocks and portfolio and help you grow in a regular and safe way. So, safe investing is something that is very important as an investor, which people fail to realize. In India, usually, as I told earlier, that people listen to others, they follow the herd mentality, and they end up making losses. So, what we focus on as a stock brokerage house is that we need to help you in safe investing, because the basic fundamental behind investing is that capital preservation should be there. Only after capital preservation do profits come. What we do is, as an investor or as a trader, we usually go the wrong way. We let greed overpower us and we just see about, okay, this stock can double, this stock can give me that. Sue's loan has come to 10 rupees from 500 rupees, maybe this can go to 50 rupees. But we fail to realize that this is not safe investing. So that is where we step in. We only recommend you good companies. Only we recommend you good quality stocks, which usually will never give losses, irrespective of where the market goes, if you are investing in a right and timely manner. So coming to that part, that why us as a stock brokerage house for opening a trading and demat account, is that the client personalization that we offer is very, very unique. It is something which no peer offers. The personalization is the game changer. That if you are a client of our company, you can feel free to WhatsApp us on the official number. You can get guidance there. You can always ask if you are in any doubt. Even without personalization, all the services which we are giving as a whole is a bundle house of knowledge. We are also sharing great knowledge or financial events or latest financial events pushed on WhatsApp to you. That is something which also no pair is doing. So our focus is not on making brokerage from the client. Our focus is only on the growth of the client. That is what matters. That we only have the focus that you as a student should grow. You as a youth or young investor should make a good portfolio, because you are not realizing the value of time that you have. So such concern, such care for the client, that is what is important, as because we believe in long term relationships. So free and apt financial guidance you have for life if you are investing through our company and you are opening your account with us. 50 years of market experience, we are here since the 1970s, so that in itself speaks about the credibility and trust and the command that we have over stock market. So that kind of experience we can provide to you. I have been full time into my family business since the last 7 years now, and I have inculcated those values and morals from my seniors and my parents and my family to inculcate those to the clients, and we can help you grow in the best way. And similarly, 25 years of existence as a stockbroking firm that helps us let you invest in the best way and grow your money in a timely manner. Obviously, again, expertise in fixed income investing, as I told you, no broker usually recommends fixed income investing. So fixed income investing is bonds and stocks or uh, NCDs. So that usually is a part which we also have expertise in. Similarly, unlisted securities like unlisted stocks, we even have that kind of portfolio. So we are offering all types of financial securities in one place. So we are a one-stop hub for all your financial needs. So that is something which is being offered here, and with proper transparency, trust, personalization, and at with the best in class and state of the art technology at place. We have a very fast mobile, desktop, and web trading services. We even have both percentage and discount brokerage model. So even when it comes to brokerage, as I told you that the youth is going the wrong way, that they're just looking at the brokerage, but it's not that. That should not be looked on. So we have both models, and both our models are very, very cheap when as compared to the market, because even in the percentage model, we are charging just 0.2% and giving all these features. Usually all of the peers in the percentage model are charging 0.35 to 0.5%. Similarly, in the discounted model, it's 15 rupees per trade, which is usually 20 to 25 rupees per trade. So this is just a glimpse. As and when you talk to us more, you open your account, you'll get to know that the comfort which is offered at every single step, starting from the account opening till your journey, is very, very unique. So as I told you, the time is the basic ingredient for investing, and which is very important. Is that which the basic investor like Warren Buffett also states, is that I always knew that I'll be going to rich, but I never doubted that for a minute. So if you are young, if you have that time, if you're investing timely, and you can give time to your equities and investments, then there's nobody who can stop you from making money. And you do not need to wait for the right moment. A lot of people think that, okay, I'll first get a job, I'll do this, then I'll start investing. I'll first complete this, then I'll start investing. So this is the wrong ideology or the wrong path you're going on to. It's always very late to invest because you're missing on that time, the time factor, which is the biggest factor in the stock market. You don't need to wait to get rich to invest. You need to invest to get rich, because investment of even small amounts of as little as even 1,000 rupees per month can lead to unprecedented gains which you're not realizing. And it is very, very important that you go for that. So obviously, this ends up my presentation as a whole, but yeah, one second. Yeah, so this ends up my presentation as a whole, but you are most free to ask any doubts and any questions you have regarding the session. This was just a basic brush up regarding investing, why you should invest, why you should be becoming an investor at an early age, why you should be going on with us. And my number would be shared with all of you as well, the official number. You can feel free to go for it as well.
Thank you for such an informative event, sir. Now, let's move on to any queries that we have with us. You can unmute yourselves and ask any doubts that you have, or you can write your doubts in the chat box.
Sir, I have a query regarding the downfall for the Paytm IPO. Like, even my father is also into investing,
Okay,
and
please.
there was this hype about that it would go very high levels, but now I'm seeing that it's just getting down and down, and many people are calling that it's a failure, as in regards.
So your question is regarding why it is falling. Is that the only question, or like, is there something else that you wanted to know about that? Or
Yeah, no, I also wanted to ask because I have opened a trading demat account with my bank, and
okay,
I'm also no because my father encouraged into this kind of stuff because he's
right,
also
exactly.
very interested in investing. So I thought like he gave me around a very small capital, but enough to buy very good
I
IT
understand.
stock.
See, yeah. I think, see, firstly to that, I'll say for all of you that this word known as small capital or less money is nothing. In the sense that do not ever feel that your money invested is small or less. I think every single penny counts for everybody, and that is what is important. So never feel that your investment is less as compared to somebody. Everybody has their own risk appetite and their own preferences, I'll say. So every capital is a good capital to invest in the stock market. So that is up to you how you want to assess that. Secondly, coming to the main point is that the Paytm IPO or the new issue fell due to a lot of reasons. But obviously, the foremost reason for that was that it was overvalued at the time of IPO itself. So that is what we need to assess, that when it was trading in the unlisted market, pre-listed market, as you say, and as I told you that, okay, we also deal in unlisted securities. So it was also trading at 2,500 rupees, and the issue came at 2,100 rupees, if you must have seen that, and you must have applied for the IPO as well. So even during that time, the IPO was overvalued. So at unlisted, it even went up to 3,000 levels. It was there at it was trading at 2,500. A lot of my clients also had bought it at 2,500 levels, and we made them exit at 3,000 levels. So somewhere I'll say two factors, basic factors, which actually led to the crash were that it was overvalued, firstly, and secondly that there was a lot of greed factor that crept into the Paytm IPO. I feel that I think I explained during the presentation. One thing I don't know if you guys caught that was that if something or some stock everybody starts talking about, I think you should refrain from that. So that is one catch here, which I'm telling you, because every person in India was talking about Paytm. Even the people who did not invest or did not know how to invest wanted to invest in Paytm. So it was not a wrong decision, but somewhere that could have given you a hint that, okay, if everybody, we should wait for the IPO to list and then invest. But obviously, the consistency with which it has gone down is morely due to the valuation part and the selling pressure. So a lot of times what happens that even the company is right, but there's a lot of selling pressure on the stock. So that selling pressure can be of even big institutions, which you as a small investor or a big investor or a medium term investor can fail to realize, because you feel that, okay, why the stock is falling consistently even when it's doing good. So for Paytm, I'll say, I don't know if you have seen the fundamentals. So I told during the fundamental analysis part that seeing the balance sheet, the management, the profit and loss is also very important. So Paytm is a loss-making company. So even right now, it is a loss-making company. So if it's a loss-making company, then you need to be aware that there are risk attached if you're investing in a loss-making company. It's still not making profits. So that is also one important point to know, that if you are investing in a company, make sure that the company is making profits, because if the company is still not making profit, then how can you assess the valuation? So there are a lot of factors which can be answered for your question, but I'm just telling you the basic ones. Maybe when we interact more, I can get more onto that.
Okay. But also your views on cryptos, like, because when I was around, I think so in 2018 or 17,
Yes, right.
I saw the price of Bitcoin. It was like around 1 lakh, and I told my father to just invest in it. But after 5 years, it has gone up to 28 lakh, and I kind of regretted by that. Why
Yes,
didn't you buy
right.
it back then?
Okay, okay. So no, so what is the question exactly here? That
My
why
question
didn't?
is, for as you are a professional
Yeah,
in your profession, my
right, right.
question is that is there any chance that will this government ban crypto or make very certain restrictions on it so that it would discourage us to buy? Because I am being hearing these rumors, and it may, I had this ambition to buy one, but because now everyone is discouraging me, I am not sure what to do.
So I think, yeah, definitely to this, I'll say that right now still remains in a gray area, as they say that right now still it's not clear what the future for Indians would be. But in the recent budget, if you have seen, the government has put a tax on the cryptocurrencies, and they have put a 30% tax on the gains that you make from cryptocurrencies. So that has opened up two lanes itself. Earlier, people were thinking that okay, you might not make it legal and it'll be totally illegal. But if they put a tax right now, maybe some more formalization and uh, compliances can come in future. So that maybe can help it go more. So I can say that it can be risky, but I won't say completely that it is wrong. So you can be investing in cryptos, but cryptos are definitely very volatile and risky. So it's your call, but yeah, definitely crypto somewhere, or the technology for that matter, the blockchain technology holds a very, very futuristic value. So, but I won't rule out the fact that government can make it legal. So I won't, if you're saying that others are saying that you should not be doing it, I'll have a 50-50 opinion on that right now. I won't say that don't do it, and neither will I say that do it properly or go all in. I won't say that, but you can do it in a little way, very, very little way.
Thank you.
Any other questions? Anyone?
So there's a question in the chat box. I'll ask that.
Okay.
Based on what criteria the market rates change every second?
Yeah, so the basic answer to that is demand and supply. So the market rates change during the market hours. Firstly, the market is open on a specific timing during the day, Monday to Friday. It's 9:15 a.m. to 3:30 p.m. So during those market hours, the market rates fluctuate for all the stocks and indexes. And the basic criteria why those changes, demand and supply. For example, let's just take the case of Paytm only. If Paytm is trading at 1800 rupees and suddenly it becomes 1790, 1780, or during the seconds it's falling down. So that is because somebody is selling it a lot. So basically, sellers are more than the buyers at that point of time. So it is a basic game of buyers and sellers, and who are more at what point of time. So that is what decides the usual market rate. But this is just a basic overlying and underlying funder. As I had explained during the presentation, the valuations and what is happening inside the company, and what are the future prospects of the company, and what is going to come for the company, what is the management, and what is the different fundamentals associated with the company. That is also what decides the pricing and the market change. But I'll say that every second, on a daily basis, if you want to assess, then that is due to the demand and supply. That is the basic thing which is making the stock go up and down on a daily basis. But all these factors that I told you, that is what usually decides the price and the number of buyers and sellers. Yeah, anything else?
Thank you, sir. So we have another question based on forms. How to analyze a certain company? You can't abide by the news headlines as they are very late. And to be more specific, is it all related to their cash flow? Websites like Money Control can't provide you with all the info. So how do you analyze a company's growth to such an extent that you can trust it with your savings? Try to elaborate on penny stocks too, to name a few. Let's say GTL, Infra, Khoobsurat, Nipon Fire, etc.
Okay. All right. Yeah. So to this, I'll say one thing that firstly, to analyze a company, as I had told earlier, also there are a lot of factors. There are a lot of ways. Firstly, it depends that in what way are you analyzing the company. Are you analyzing it for short term? Are you analyzing it for the long term? So if you're analyzing it for the short term, then you can analyze it even on the basis of fundamentals or even on the basis of stock technicals. For example, sometimes a bad company even does well in a short time frame. That, for example, a bad company which is trading at 5 rupees, it can go up to 10 but have no fundamentals and be a very bad company, but due to technicals or different factors it can go up. So if you're assessing for the short term, the dynamics totally change. And if you're assessing it for the long term, then comes in different factors like cash flow, websites that provide you information of financials. But if you think that okay, a company or a website cannot provide you with all the info, there are a lot of other websites that provide you with sufficient information. But overall, you do get the basic information like balance sheet, profit and loss, the cash flow statements, the management, the annual report. So I'll for all those investors who are wanting to analyze a company in the best way, I think the ideal way, which I have personally experienced, is annual reports. So if you read the annual report of a company, that is available on the company's website always. For any company, for example, any listed company like ITC, Reliance, or any stock, you go to their website, you will find the latest annual report. That annual report gives you all the financials. So this is also one thing which nobody might tell you, but annual report is usually the Bible for understanding a company properly. If you think that, okay, you're not getting any report anywhere else, that annual report of the company on the company's website itself will always have all your questions and queries answered, because they'll tell you the vision, they'll tell you the financials, they'll tell you all the listed profit and loss statements, they'll tell you what vision they have, what wrong went during the last quarter, what went right during the last quarter, how the company has been faring, what future vision they have. So when you go onto the company's website, you even get the presentation, the investor presentation, and you get the annual report. So I think these two things can definitely help you analyze a company for the long term and give you all the financials which you're not getting on the website also. Secondly, analyzing a company's growth to such extent that you can trust it with your savings is answered in a similar way that, okay, if you're analyzing the company's presentation, if you are reading through the annual report, because annual report is not small, it is a lengthy book which you need to read at least some important pages and skim through. So if you're putting in that much effort, you are putting in your hard work and analyzing the company that you can trust it with your savings. But to this, I'll answer that I had explained in my presentation that three important points like good management, the valuation, and timely investing, and the overall management part, that is also very important to trust with your savings. So that is why I'll say that always be in good quality stocks that you have observed on a daily basis, because somewhere if you have used the product, or if you have heard somebody using those products, or if you feel that okay, the company is faring well, so you can definitely put your money because you have felt that, you have gone through that cycle and you have seen that, or if you have seen somebody else who has witnessed that on a personal basis. So a lot of factors go hand in hand, but for trusting that company with your savings, you need to first assess the company's fundamentals very, very well. It should be a profit making company. It should be giving consistent revenue. The revenues must be increasing consistently, and it should be undervalued with respect to the industry also. It should not be overvalued. So sometimes in that, the P factor or the price to earnings factor comes into place, that okay, you should not be investing into high PE companies. Secondly, now asking about penny stocks, I'll say that penny stocks is an area which is usually very fancied by all investors or traders, or especially young investors. But I'll again say that one should usually always refrain from penny stocks, because that is the mistake which everybody makes in their life and end up losing their money. So penny stocks are usually the companies which have fallen a lot from their higher prices, or a new listed company is listed at a low stock. So that is because somewhere something is wrong that made them fall from hundreds of rupees to being a penny stock under 10 rupees. So like GTL Infra, it's trading at 2 rupees right now. So that is, you're just fancying it because it's at 2 rupees. But why do you think that GTL Infra should go up from here? What are the parameters? Why did it go down on the first basis? Like, so that is what you need to assess. Don't see that it is at 2 rupees and it'll go up. Think why it came at 2 rupees at the first place. Why did it go so down? What was wrong? What went wrong for the company? So is that being corrected or no? Is that being actually corrected? Are the books fine? Are the fundamentals, or is the company actually earning? So this is one thing you really need to be sure about and not fall prey for the penny stocks. So that's why I said that why investing maybe through our company or our stock brokerage house or opening a trading and demat account with us is different from all others is that when you are discussing these things, we'll usually say no for all the penny stocks because 99% of the times penny stocks do not give you profits, or even if 5 penny stocks will give you profit, the other 5 will take all your profits. So this is, so that you need to refrain from, because ultimately your aim should be making consistent money. You can't make money in 5 stocks and then end up losing all the money you made in 5 stocks in the next year, and you are actually standing at no gain no loss. So that is not the idea of investing, right? So this is also a trait as an investor that need to understand and imbibe, that you need to be a good investor and invest in good quality companies, and that will give you a return which nothing else can give. So patience and perseverance is also very important. But all this which I have told right now is just a brush up of the question that you asked. There are a lot of more factors that can be helped and used to analyze a company for you to invest your savings into it. But it is but you can gain that from constant investing and knowledge gaining. So nothing comes in one go. You can't become a pro at investing or pro at analyzing company just by seeing the fundamentals. Even assessing the stock movement, even observing the daily movement of the stock sometimes helps you to do that. So that's why I'm saying that a lot of factors go on that. It's not just one factor. So but that can only come with practical knowledge and timely investing. So if you start investing from a young age, you will yourself become a pro at investing by your own observation and practical knowledge in some years. So that is why I'm focusing so much on the factor that invest, just start right now. Don't wait. Even you can even start with just 1,000 rupees per month. I'm not kidding. And that is what people won't explain to you and come to you. No broker will feel happy and tell you that. So yeah, next question, please. This was just a brush up of what you asked me.
Thank you, sir. Next question is it safe to invest in unlisted stock?
Yes, it is absolutely safe to invest in unlisted stock. So but it depends in which unlisted stock you are investing and who is recommending you to invest in unlisted stock. So if you are doing in unlisted, as I again told during the presentation, that we deal in unlisted securities a lot. We have a very big setup for unlisted securities, but it depends who is recommending you, because in unlisted there are a lot of defaults and scams also going on, and also it is very hard to trust the broker, because in unlisted the process is different, that you're buying a stock from an unknown seller and you're just paying your money first and then getting your demat stock into a demat account in some days. So it is very important to be safe even for the process. So it's not just to be safe for the stock, it is also important that you're safe in the process. So both those things matter. But yeah, definitely it is safe to invest in unlisted stock. It depends on which stock you are investing in. So to that, I'll just show one thing again. If you can see my screen. Is my screen visible to all of you?
Yes, sir, it is.
So I just opened that. So this is just one thing that I wanted to show, that these are some investments that were recommended by us. So these are the unlisted investments pre-IPO which I've written, like the NSC, Nazara Technologies at 890, NSC at 850. We made our clients buy NSC as an unlisted stock. NSC is still an unlisted stock at 850 rupees. Now it's trading around 4,000 rupees. Nazara Technologies, we recommended and made our stocks buy at 890. It's around 2,500 right now. RBL Bank, we made the clients buy at 100 as an unlisted stock. It went up to 800 after listing. Similarly, ICICI Lombard, Candlestick Bank, SDB Financial. So definitely investing in unlisted stocks is not a bad option at all, but you need to be going with the right person. So I think there we step in. I think when it comes to unlisted securities, especially in Delhi, we have a very, very big name. So you can definitely go for unlisted, but you need to go through the right person and be in the right stock. Again, the choosing of company matters here, I'll say. But yeah, definitely it's safe to invest in unlisted stocks. it's not a bad option because that gives you more alpha and more time and more capability to make profits because you are investing in the unlisted space. So if the company gets listed, then it usually grows big and you can multiply your money in that case. Yeah, next question, please.
Okay, so the next question that we have with us is should we invest in US stocks?
Yes, definitely. I think again, there's no harm in investing in US stocks right now. So I think a lot of avenues are being opened up for that, and some brokers have started offering that. And it is definitely not a bad option because you can have some portfolio. So that also is a part of portfolio diversification. As I told you earlier, that you can diversify your own portfolio even into equities. So, for example, you are investing some of your money in US stocks, some of your money in Indian stocks. Even in Indian stocks, you're investing in different ways. So, definitely, as a part of portfolio diversification and as a part of investing in good companies, investing in US stocks is definitely not a bad option. It is definitely a good future. But it depends on the choices you're making there. So, I'll prefer that you stay in the top quality companies in US also if you're investing, or your research should be very strong. Next question, please.
So that's all the questions that we have with us. I'd
Okay.
like to thank you for sparing your precious time for us. It was a great session, and we learned a lot from it regarding stocks, where to invest, how to invest, the right time, and whatnot. Thank you again, sir, for guiding us all.
No issues. Thank you so much. I think everybody can feel free to WhatsApp with their doubts or anything regarding account opening on this number, and my team will get back also, and I can also personally attend to them. No issues on that front. And it was a very nice gesture to arrange all this and have me here. It's always very good to share my knowledge with all the people because that's something which I actually love to share with all the youngsters. And I'm also young right now. So I feel that, okay, why are the people who are not aware of this missing on this good investment journey which lies ahead? So definitely it was very knowledgeable for me as well to interact with all of you and have you a part of this. And thank you for arranging this and letting me with this opportunity to present this. Thank you so much.
Thank you, sir. Now I'd like to ask all the participants and audience present here to kindly fill the feedback forms that we have provided to you in the chat box so that you can receive your certificates. And as soon as you fill the form, you will get your certificates with you. So kindly do fill the feedback forms right now. I've again sent the feedback form link to you in the chat box, so please do fill it so that we can provide you with your certificates. And those who have filled the feedback form, they can leave the meeting. Thank you for being a great audience, guys. Thank you. You will receive your certificates on your respective emails that you filled in.